What is going on, and welcome on into the big, much anticipated, highly anticipated, much awaited, whatever you want to say, big FOMC day today. So we are looking at the Qs right now, and we are down as we speak. I'll go to the S&P really quick too. SPY is sitting here down 0.34% on the day. It was down a bit more. It's actually rallying back the past like 15 minutes or so. But in about 15 minutes, we're going to get the FOMC announcement. We're going to get the details from the Fed and Mr. Powell and what they decided to do. Then we'll have about 30 minutes to kind of see how the reaction goes there. I'm expecting a ton of volume and a ton of volatility this afternoon. And then we're going to get Powell's press conference. We'll have him live, and we'll have the audio for that and the video and the questions. I think that's what's really important because, like I've been talking about, I think we're going to probably see a 75. I mean, if you just look at what the expectation is, we're going to see a 75. We're expecting a 75. Yeah, could they do a 50? Yeah, I guess like Canada did. I don't know if the Fed's going to do that. I think that would cause, and they know it, that would cause exactly what they don't want in terms of a face-ripping rally, at least initially, and then depending upon if they come on and walk it back or try to walk it back, in Powell's press conference, and then next week's CPI could be, what turns them around or what turns the market reaction around a little bit. We'll see. But I think that they know that's going to happen. And then it really just comes down to what Powell says. And if they did that why they do it. But then if they do a 75 like we're expecting, what are they thinking about going forward into the December meeting about a month and a half from now? Then February, what's the thought process here? Is it going to be 75 today, 50, 25, 25, or are we going to pause at some point early next year and just wait and see, what happens with inflation numbers and other data that we get? That's kind of the question, and we're going to get a lot of insight into what Powell is thinking and what the committee is thinking behind the scenes, hopefully in the press conference. But then again, Powell's going to have to walk that tightrope because we know how he's been and it comes to the market. So he doesn't want to say, too much about a pause, because if he does, the market's going to love it and it's going to rip, and they don't want that to happen necessarily right now. So we're going to see what happens here, but it should be a really exciting day, to say the least. So I hope everyone's doing well. William says 230 calls and 220 puts on Tesla. Yeah, what's funny? It's actually funny because I was talking to my dad this morning about, and he was mentioning Tesla. He's got, something similar on Tesla is how he's looking to play it. And it makes sense, Right now, Tesla's at 221. So if we get a ripping rally, good chance Tesla is going to be up in the 260 area pretty quick. That's a gap to fill back from early October, late September, early October. And if we have a dump here today and the S&P gets obliterated, Tesla could be down around $200 tomorrow, this week, very fast. So I don't think it's a bad idea. I just think that the only concerns that I think a lot of people are doing that. So the option premiums are juiced out of your mind. And so, we'll see what happens, but the reality is going to be last time was wonky, like crazy wonky. By the way, take a look at this. Here's the S&P SPY's daily chart. Where'd it hit? Where'd it bounce today? Zoom in. If you guys can see that right there. What's that blue line? That's the 50-period moving average on the daily chart. So that's at 381.50. It bounced exactly to the cent almost at that spot today. So it was actually came 11 cents underneath that level. My bad. But that's where it bounced, and it's essentially pinned right on that 50 SMA, and today's going to be huge. The way that I see it is pretty simple. Under 380, a close today under 380, really a close under 378, bearish. A close above 390, bullish in the short term. CPI is next Thursday, I believe. That's your next event. But until then, if this reaction holds, you might have a couple of days of momentum in either direction until the CPI will ultimately give us the next, direction from there, right? CPI comes in super hot, we'll probably head down. CPI comes in better than expected in terms of, slowing down. We probably rally, right? Depending upon where we are next week. But that's where you have about a week or so until that. So that's at least where my head's at. Ready to get my calls obliterated. Oh, yeah. Calendar calls for SoFi, Airbnb. Rolling for the next week. The thing about this is that either way, the premiums should, you probably could. The thing is, because there's a CPI there. So, you're going to have, even out to next week, there should be a decent amount of volatility, and then premiums should hold up decently, I'm thinking, because you got a CPI that's coming up next week. So people are going to be kind of playing or hedging or thinking about both ways, depending upon what happens today. Then get ready for CPI next week. And the double whammy would be, bullish today or dovish today from the Fed, talking about pausing whatever, even if they do a 75, right? Talking about pausing next year or whatever at some point. If that conversation comes up or whatever, and then we start talking about the light at the end of the tunnel for the Fed in terms of rate hikes. If they start talking, who knows? And then you get a CPI that comes in lower than expected next week. I mean, you got two booms like that would be, bull central would probably be, well over 4,000 on the S&P 500 by the end of next week if that's the case. I mean, that would be two perfect scenarios. And you can get the exact opposite, right? 75 basis point hike, essentially no talk of pause at all, today if that happens. And then a CPI comes in hot next week. Oh, we could be at new lows in 2 weeks. So that's the setup. Personally, I have nothing. I have here's my only position. It's YINN, the 20 puts I sold last week, the yin puts. Here's yin. It's at 23. So as long as yin finishes the week over $20, I'm good. It's possible we get a pretty hard reaction off this Fed today. It's Wednesday. Chances of this coming down below 20 by the end of the week. Possible, very possible, but we'll see. I can always cut it off. And the thing is, this is going to bleed too. So even if it does finish under $20, I could still be green on the trade because I sold it for $100. I sold the option for $1. And so ideally, I want to see it expire worthless, but it's possible that I have to buy it back. If I have to buy it back for a little bit or, whatever, it's not a big deal. But that's the only thing I have into this. So I'm not touching anything. I mean, I'm not going to guess. I'm not looking to guess. But like we said, over 390, bullish, under 380, really 378 for me. Bearish. I think we could be at either place today. It's possible. We could be there. So we'll see. Q&A's, the Q&A will be that's what is going to be the most crucial part, I think. Yes. Someone's going to, yes, they're going to ask pause. We're going to get the questions. We're going to see what they say. There should be some good, to be honest, as nerdy as it sounds, I'm actually more interested in and less interested in the price action that's going to be wild in the meantime and more interested in what Powell actually says. And then that can give us a better picture. And ideally, in the perfect world, the price action kind of correlates to that to some degree, but it doesn't have to, it doesn't have to. So jobs are higher than expected, probably means bigger. I mean, the thing is, I don't think that they're going to do a 100 basis point hike. The hike is not going to, there's not really much of a bigger hike that they can do. It's going to be a 75. I mean, there's speculation that maybe they pull a 50, but I think that's very, very unlikely. So they're not going to do a 100 basis point hike. I mean, I guess it's possible, but it's extremely unlikely. I would say it's probably more unlikely that they do a 100 basis point hike compared to a 50. So if you had to put and then even just the market's pricing in where you put your money, the money's on the 75, but there's a slight, chance of a 50. There's no chance, at least minimal chance of 100. So that's kind of where we're at. I don't think that we should expect a 50 by any means. If we get it though, holy crap. I mean, talk about, wild moves that we're going to see. So that's what we'll do. Also today, what is going on? So we had some bear flag plays today, really SPY this morning into early afternoon. It was pretty much playing right here. This is your bear flag. You kind of had trouble getting above this 383. And then eventually you kind of had this higher low kind of wedge after a big move down. Well, not huge, but a decent move down this morning. And then a breakdown into those new lows, which was a nice little play. And then, of course, it's bounced back the past, hour or so. Same thing with IWM, a little bit weaker on IWM, but same idea. Broke below this 181.20. Once it broke below there, pretty big downside for about $1. And it's bounced back since. But the Dow, believe it or not, is actually up today. The Dow is, just now, recently, this little push got the Dow to go green. The Dow is green. IWM is down at 1.17. So small caps are actually, they were outperforming. They were kind of in line with the Dow to a degree where the small caps were stronger than the S&P and the NASDAQ. But they've now done the opposite today. They've kind of gone the opposite where the S&P is now down 0.2. The QQQ is down 0.6 and IWM is down 1.1. The Dow is green, barely, but the Dow is green, believe it or not. Here's the Dow's daily chart. It's pretty interesting to look at. Pinned up right at that 200 SMA. So right there, that orange line is the 200 period moving average on the daily. So it's sitting right there. Good support around this 325. But obviously, we're going to have something to move us today, you'd think, right? I want to do a volume test in a second I got copyrighted because I did a volume test on this. and it got copyrighted, and it was like a pain in the ass last time. I don't know why. Like, it's just like for 10 seconds of sound, but I guess this music that they play, if I play this, will get me copyrighted. But I'm going to test this out. So make sure the sound's good, the volume's in line. I know it might sound a little off because there's a slight delay from when I'm doing something to when it gets heard or whatever. So when Powell comes on, I'm going to turn my mic off so we can listen to him, and I'll come back on if I need to, but that's what I'll do. But just make sure this sounds decent. It's not too loud. It's a little volume test. Let me know if that sounds good in the chat. And while you're there, hit the thumbs up button. It doesn't cost you anything, so that would be awesome too. But we're gonna get this rate hike in about 4 minutes or so, and we'll see what we end up just getting off of this move. It looks like, when you have these types of days, the play is always to kind of fade the initial move. Is what we mean by that is like, hey, if we get a rip off the initial move and we're up at like 386, 387, maybe that's worth some puts. Some 383 puts or something like that, 385 puts. They're going to be expensive maybe, but, well, they'll be cheaper, obviously, if we get a move like that than now. But then, for a move back down, yeah, you could play it. I'm not super interested in, playing. I don't like playing these moves because, again, you're kind of gambling. I'm not a huge fan. Sounds good. Could be a touch higher. Okay, I can up it a little bit higher on my end. And when Powell comes on, I can adjust it too, but that's good. And he might be talking lower, so I might have to adjust it higher. But that's the plan. That is the plan. Outside of that, AMD had earnings yesterday, I believe. Yep, they did. Look at AMD. Look at this AMD chart. Check this out. Here's this little channel. It's been in this channel, and I didn't do it today because I was concerned with the earnings. I don't want to touch that, and really, we could break out of this with the earnings. But looking back, it was actually a really good short this morning. If you shorted AMD, what did it do? I drew this channel in a couple of days ago, so it came up to the top of that channel literally perfectly, which almost never happens, and then was a quick little reject. So from like this 63.90 area, you fell back about $3, a little $3.50. So what is it? If you just got a piece of that would have actually been pretty good. But I didn't want to touch it after the earnings. So we'll see what happens outside of that. NVIDIA, AMD, so the semis are doing pretty good. They're up. Everything else, though, is decently down. Yeah, if you look at the risk on. Look at that risk on watch list. Let me actually up this too, by the way, so you guys can see the price. My risk on watch list, look at this. They're essentially all red. So Affirm, ARK, Meta, Coinbase, Snapchat, Upstart, Shopify, Rivian, Mara, they're all red. So, and that's kind of shown by what we have with IWM, small caps, being the Russell being more red than the S&P today. So, good afternoon from Lakeland, Florida. How's it going, Kevin? Hopefully everyone is doing well. I know it's been a crazy year. I mean, to say the least, right? But the last thing you want to do, at least if we learn anything from this year, is blow up on a day like today, because it's not worth it. It's not worth it. Biotechs are flat. This is also another thing to keep in mind. I have this. I have an alert set somewhere, I think on my phone, on maybe a different app, but I'm looking at this. If XBI gets over 84, oh my. I mean, we got to look at that for a big time breakout. So that's the spot. XBI is like right on these indicators. Today will be a pretty crucial day in terms of getting us in, a bigger move to the either way. But if XBI, biotech ETF, breaks 84, I mean, we could be looking at 90 quick, couple of days into next week maybe. Who knows? But we got to get the confirmation above that level, and we'll see. We will see. Let's make sure we have everything up to date here, and we should get the Fed hike any minute. And then we'll get the reaction from Powell and stuff in a bit. So everyone's getting ready to go. All these news accounts are kind of crazy how they handle this stuff. Like, these guys are dialed in. They gotta be very, very fast. All right, so I haven't seen it come through just yet. Oh, here we go. So the Fed raises benchmark rate 75 BPS. So they did a 75. The Fed did a 75 basis point hike. That's the news. Let's check on the reactions across the S&P and see what the heck is going on. So, not surprised, but what did SPY do? SPY ripped and it dipped, and now it's sitting at the same spot it just was before the hike. But let's see. We're hopefully the next couple minutes we should get a decent sense of the first direction, which we know doesn't always end up panning out to be the final direction by the end of the day. So S&P went green here. It's up pretty good. This is what I was thinking too. It's up a lot, actually. Look at that. 0.3% now in the green. It was down 0.3. Now it's up 0.3. And we've seen bigger moves, but it's a pretty good move. We were thinking about this, and if there was a potential play that I was interested in, I would be interested in a short or getting a lottery ticket essentially for puts for Friday. I guess you could play today's puts, which are even crazier, but up into here. If we get up into here as the first move, which we're getting close, maybe it's worth something to keep it just to think about. I'm not looking to be aggressive at all, but that's maybe an idea. Again, the first move has not historically been the final move on these FOMC days. So that's that. 75 basis point baked in. I think, yeah, I know it is. I think it's the bigger story is, what does Powell say? When we get these events, CPIs, FOMCs, like many times you actually see like decent rallies off the back of them. Of course, right? Like last CPI, we dumped down in pre-market and we had a huge rally that day, right? Many times you can get some big rallies off the back of these events simply because now the uncertainty from that event is gone, right? Now, of course, Powell can say whatever he wants to say, but what the Fed just did is now done. It's over. Like it's certain. Like we now know it's done. So the uncertainty is kind of taken away. Now look at this. We're getting up into our spot. So this is interesting. I mean, you don't want to jump the gun, but this is interesting for a possible area to look at for a lottery ticket put, because we'll see. But you can easily get blown up, guys. We saw what happened last time on the CPI. It doesn't matter if you think we need to go lower, hit new lows. You could think that, and we may get there at some point, but the market does not give a crap about what you think in the meantime. So don't want to be doing anything dumb. But here's where there could be something. Let's just go take a look at like what might make some sense. Let me go jump over to the option list, option trading layout. I'm kind of covering it, but it's not a big deal. This is like the option contracts that I'm looking at. I'm going to go to SPY. I'll just pull something up in case I want to take it if it's interesting and it's cheap enough, something super cheap. But I'll pull SPY up right here. Essentially the only position I'd be in. And then I'll pull up SPY again. I'll pull up the option chain and we can see how stuff is moving. We'll check out some other stocks in a minute too. We got about 25 minutes, more than that still, until Powell comes on. I would probably not play today's expiration, although yeah, you can make a lot more money off today's. I play Friday expiration. So if you look at Friday expiration, they're still pretty expensive, but not surprised at all. So if you were looking at puts, let's say you were looking at puts today because you wanted to fade the initial reaction, play the opposite. This is kind of a situation. If you were looking to get short, like you're getting a gift right now, potentially, right? If you were looking for something to go short, like you're getting a good entry if you think we are going to go lower, right? And it doesn't mean we have to, but let's see. So you can go after like 385. Let's go to like the 385 strike. Let's just play those because let's look at those. I'll pull those up on the chart. Let me see. I'll get myself out the way for a second so you guys can see what I'm looking at. But like this is the chart of these options. So these 385 puts, essentially we're trading at prior to the announcement, were like 570, 580. Now they're going for 375. So you could, now of course, you could be down huge in seconds. You could play something like this and you get a quick bounce back and they go from sub 4 to 5 and you wash your hands and move on. Like that's the type of, idea. Let's see. Outside of that, there's like, maybe you can go with like 380s to play a little bit lower risk, 380 puts, and you can go a lottery ticket here. And 380 puts, you can get them down here around $2 maybe, and maybe look to sell them at 3+ if we get the flip up direction. So I'll keep that up. I'm not going to touch it right now, but I'll keep it up on the list as an idea. And then we'll jump back to TradingView. That's Webull. This is TradingView. So link to TradingView below, or if you want to check it out. But I like to look at this because I have all of my watch list, the charting features and the drawing features. It's just easier for me to show things and look at stuff, and it's cool. Quick $300 on a 391 call. Nice. That, I mean, if you had snag calls into that, boom, you got, or if you had grabbed any of that move, maybe you had about like a second, or you had a minute or two, because we had the initial reaction up, or like briefly it was up. It was like up to like right in here, something like that, and then it popped down to here, this 382. And then it held that, and then it rallied like, $5, $6 from there. So, I mean, this is going to be, from our perspective, right, this zone, right, from 387.50 to 390 on SPY is the zone. That's the crucial zone that we've been at multiple times was support back here early September, resistance in late September, mid-late September. Like that's a spot. Over 390, if we get a close, like the close of today's candle finishes the day over 390 after Powell, after everything is done and everything is quiet, like that would be, from a chart perspective, that would be very bullish. And the idea would be, or the thought for me would be, probably looking at 400 on SPY as your next target. Could be, could miss it, could have a complete wipeout tomorrow, the absolute, fake out day today, and then tomorrow goes completely the other way. Yeah, of course, that could all happen. But if this momentum holds, ideally that $400 area would be the target, and then you'd want to see it hold above 387.50 for that to build this, prior resistance as support and go to there, and then that's the next spot. Maybe that happens, or probably would happen before CPI if we went up and finished strong before the CPI next Thursday. So keep that one in mind. That's my thought process as just overall potential market view if this holds. If not, I think we have a good chance to play the backside of this. And hey, last time we got really two reactions. We started off, I think after the Fed announcement, we dumped down. I think that's what happened. We dumped down off the Fed reaction last meeting. Then Powell comes on and the market ripped, right? So we went up, hit around, we actually got up to around 390 on SPY. That was actually back on this day. Let me go back to that. That was back here. I believe it was on the 21st right here, this day right here. We pushed up, and then Powell, as he started to talk, like it was good for the first 10, 15 minutes, and then just slowly the market started to give it back. And the next thing you know, we're at lows, and we're breaking new lows, and we're flushing hard into the end of the day after Powell got off. That's how we finished up last time. So maybe today you get something similar. I don't know. The flip side where you got a rip, Powell comes on, you pull back, and then it catches a bid, and then it starts to kind of rally. And if it does, maybe we actually have a strong close. We'll see. Sold 3 to 6 calls for a 30% gain. Nice. Always went on the strangles. I walked in the house from the grocery store. Tesla up $6. Let's take a look at Tesla. Yeah, popped from, believe it or not, Tesla, this 230 area is pretty important on Tesla. Let's take a look at the chart. Yeah, 230 has been the spot I've been watching. It a lot of wicks above that, have been struggling to close above that. If we haven't yet to close this past couple of months. If we get a closing candle above 230, that's what I was saying, 230 on Tesla, that would be a strong look. And maybe this 260 target actually hits relatively soon, a couple of weeks, a couple of days, couple of weeks. On Tesla. So 30 minutes or 20 minutes now until Powell comes on. So any additional updates from this? Let's see if there's any more. I mean, you could pull up the CNBC articles and whatever if you really want to, but spot gold extend gains up 1% after. Let's take a look at some of that stuff. Well, here's the statement. Look at this. DXY tanked. Oh, let's take a look at this. Before we can look at this statement, which honestly I'm not expecting much. This is like, you can read this yourself too. I think I find an article, I forget where, I think it's maybe on CNBC or somewhere else. I usually find one every month or every meeting, that highlights what was in the last one and what was new and all that stuff, which is probably better to look at. I'm sure someone's got that somewhere. It's probably cleaner to look at. But let's take a look at some of the big players. So here's the 10-year. So the 10-year yield spiked briefly to 4.08. Now it's back under 4. It's trying to hold up there. We'll see if it can. Let's go to the past couple months. It's trying to hold up there. This is the bigger picture chart. It's not really moving. It hasn't made a decisive move really either way on the 10-year. DXY just absolutely dumped though. This is the dollar. This just dumped not off a cliff, but essentially DXY did exactly what you wanted to see if you want the dollar to roll over. You have this head and shoulders over the past day or two, actually past couple of days. Here's this head and shoulders pattern. And guess what? That head and shoulders pattern comes up right into our key breakdown zone around this 112. And it did not break back up into that area. And you got a head and shoulders there. So, hey, whether the Fed, whatever Powell's going to say, that aside, that's a pretty decisive move. And that's what you like to see, if you want to get long just in general. So that's going to help. If that holds, that's good. We got kind of a mixed bag across the board, large cap, some green, some red, AMD and NVIDIA. much stronger names there. So the semis are doing much better. They were getting crushed, months back, and they've started to see some outperformance now. Risk on names have kind of gone half and half. We're kind of in a mixed bag across the board. But yeah, gold just rallied a little bit, not to the highs of the past month or so, but it's getting back up there. It's got some nice higher lows building in, which is kind of good to see. Silver, similar situation, kind of a little bit stronger though. So silver's up here around 19.9. Going to see if it can pop $20. That was the spot got rejected. Was that yesterday? Yeah, yesterday. It got rejected at $20 early, and see if silver can get going. If it gets back up over 20, that'd be a good look. I am long silver essentially as long as it holds $18. I'm going to stay in. So we're looking for silver to get back up. We'll see if it can do it. But that's what I got. Outside of that, back to SPY. 5-minute chart. So what is it doing? So yeah, I guess in looking back, those options we were just talking about a few minutes ago. Yeah, look at those. These are the 380 puts. You could have snagged them at one in the 160s, the best, another 230s. You could have got them under $2. Ideally, now you're kind of giving back some of this move. Maybe we start to turn around, and maybe these are worth playing. But yeah, we'll see. We kind of came up. If we look at SPY, we came up right into this zone, right, and double topped on the 5-minute chart. Yeah, pretty much a double top right there. Two of those candles getting stuffed at the exact same spot. So until that breaks, which is around this 388 is your level. 388 on SPY. Over 388, probably make a run towards 390. You were trading above 390 briefly in the pre-market on, was that Tuesday? Yeah, yesterday morning. And then gave it all back pretty quickly. SPY rejecting the 100 moving average. So the 100 is going to be obviously in between, right, where it's at now, pretty much. I don't have it pulled up on the chart right this second. But you're above the 50. The 200's up here, so the 100's going to be somewhere in between. So done for the day. I am probably not going to touch anything. If I was, I would say that I do like potentially fading the rally here, if anything, but I don't know. Statement was dovish from the Fed. If Powell says the statement should rally to... Let's take a look at that statement, by the way. We have it pulled up. I had it pulled up. Here it is. Okay, recent indicators point to modest growth in spending and production. Job gains have been robust in recent months. The unemployment rate has remained low. Inflation remains elevated. Yada, yada, yada. This is the same thing. Committee seeks to achieve maximum employment and inflation rate of 2% over the longer run. They decided to raise to 3.75 to 4%, which is that 75 basis point hike. Committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation 2% over time. In determining the pace of future increases in the target range, the committee... Okay, so this is what you want to look at. Determining the pace. The committee will take into account the cumulative tightening of... So here's where I think we are starting to see them not shift necessarily, but start to talk a little bit more dovish, right? And it's just because they're just looking at, hey, we've done a lot of tightening. It takes... And look, the lags of monetary policy, they're addressing that there is lags and that they need to be, careful with these lags because they don't want to be too aggressive, essentially, is what that's saying. In addition, the committee will continue to reduce the holdings of Treasury securities, yada, yada, yada. Issued in May, strongly committed to returning. Yeah, so that's that. Assessing the appropriate stance of monetary policy, committee will continue to monitor the implications of incoming information for the economic outlook. Committee will be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. Committee's assessment will take into account a wide range of information, including readings on public health, labor market conditions, inflation pressures, and inflation expectations, which, by the way, inflation expectations have come down a lot, which is a good thing. That always tends to happen prior to the actual CPIs coming down, historically speaking. So, and that's the update from the Fed. Nothing super crazy there. It would be funny. The other thing to think about, too, is that, yes, we've got these big moves across these Fed meetings and all this stuff, which is great. These big moves happen and it's awesome. But the thing is, at some point, it's not going to be the same pattern, right? So at some point, we're going to get maybe a day where we just go completely one direction off the announcement. Like we essentially had no dip. We dipped like not even to new lows. Like I would say if we were to have a quick, flash dip off the announcement, we would have probably hit new lows on the day. We didn't even do that. And then we just went straight up. So if we just go straight up the rest of the day, that would be impressive. That would probably catch a lot of people off guard, number one. And number two, you probably get a massive squeeze out into the close, because if that direction just keeps going, people are going to be like, what? Well, I can't stay short. Like, you know what I mean? Because they're expecting that, hey, we're going to flip. We're going to reverse. The first move is always the fake move. That's what people are going to say. So if that doesn't happen, like that's where you can have a massive outlier event. So we'll see. We'll see if we get that. But so far it's getting a little bit of rejection up here into the zone. It pretty much touched our zone and then fell off a bit, but not too crazy yet as of now. Outside of that, let's take a look at some other stuff. So XBI, here it is. Here's XBI. By the way, I was looking at this. I like it a lot. It's above 84. It is now above 84. Yep, I got the alert too. I had it on my TD Ameritrade app, which I tend to, for whatever reason, just like to use. I don't know, for like my phone. I don't know why. It just works nicely, and I guess I'm just accustomed to using it, even though I don't really use TD Ameritrade for much stuff anyway these days. But yeah, we're looking at this 84 area on XBI. If this holds, I mean, here's the chart, right? You're breaking above pretty crucial spot. So this holds. I like it a lot if today's move holds. So maybe it's worth some Labu calls or some Labu, to swing for the next couple of days into Friday. We'll see. SPY runs way up. I will sell some covered calls way out to grab some premium. Not a bad idea. Not a bad idea. But I mean, you gotta be. That's one of the risks. I think that we saw what could happen. Essentially, by the way, SPY is coming down a little bit. We saw what could happen back. I think last CPI was a good example, and now look at that. So if you did short that move, it would actually pan out to be pretty good. But last CPI was a good example where we saw how we gapped down, and it was like, oh my gosh, does not look good. And then we absolutely ripped faces off the rest of the day. Like there was a period of time. I mean, you go back to that last CPI. It was one of the most insane sessions of really 45-minute spans I have ever seen in terms of the S&P 500 price action. The S&P was moving like a literal penny stock, and there wasn't any news that was driving. Like it wasn't like, oh, we just had a rate hike, or Powell said that. Like no, it was literally just after the CPI, we gapped down, inching back up, and then we hit a point where we started hitting stop losses and people getting squeezed out of positions, and we absolutely just blew up. Super, like the fastest move I've ever seen across SPY without news. So people saw that, and I mean that would scare a lot of shorts, and it could easily happen again, especially if we get over 390. If we get over 390, that's going to be probably where a lot of stop losses lie. You got to think about that. So who's in pain, right? If you're here, if we get up to here, I mean, shorts are in pain and stop losses start getting hit. You got to be careful. It doesn't matter what the hell Powell says, right? Dovish, hawkish, who cares, right? That's just going to be price action, and essentially what the heck is going on? Stops getting hit, squeeze out mode, Could it all be reversed the next day? Sure. But in the meantime, there's that. And then if we start flushing under, really, it's this like 378, 380 area. We get under here, the longs who are buying this dip, all of a sudden start to be in pain, and maybe some stop losses are lying down there as well on the long side. And so that's who's going to be in trouble there. It's hilarious. I just got a DM on Discord from someone using my name, my picture, my account. I'm sure you guys have of course, and it's like, oh, the market's been tough, but here's like fucking scam bots. Like these things are nuts. These guys go out of their way to really try to scam. And the thing is funny is that people buy it all the time. People buy that stuff all the time. Look at it. Why? Good SPY, I would have lost. Yeah. I mean, it's still up off of where it was, but it could be fast. It could be pretty fast. So we'll see what happens. Powell in about 10 minutes, and I think that's what's going to be really important. I'm really interested to see what he has to say, because it's going to give us a pretty good roadmap for what the heck is going to happen next. And to be honest, he's going to get a lot of those questions. I mean, after what happened with Canada and everything, he's going to get those questions that, he doesn't necessarily want to have to answer, because his answer almost is going to do exactly what he doesn't want in terms of rally the markets. But him saying that, hey, like maybe there's a potential pause coming at some point next year, him saying that, market's going to just eat it up, you would think, at least for now. So far it's actually trying to hold up, believe it or not. Well, this is actually a pretty interesting spot too. We had this area that was resistance. We kind of got, you can kind of see this here. We had this consolidation right in here, right? 2 days ago, Monday, our lows of Monday were right in here. It was the top of yesterday's session, really after the dump in the morning. It was the top that we got rejected at yesterday. And now we're trying to hold that area as support, which is around this 385 to 386 area on SPY. That is actually a pretty interesting spot as we look at it right now. So I guess I can draw a better zone. But here is a zone to keep in mind. So if we hold over that, that would be, I guess, your little shelf to stay long, and we drop below. Maybe that's a stop loss. Although this is a type of environment where you're going to have stops trying to get hit left and right. So there's going to be a lot of wicks, a lot of quick action, and it's going to be very easy to get frustrated by getting stopped out if you're using hard stops like that. But then again, if you don't, you're going to potentially blow yourself up if you don't have a hard stop in place. So a day to say, where I like to say, of just sit back and watch the reaction, and there will be meat on the bone tomorrow and the next day and the next week and the next month. Hate day trade makes me nervous. I mean, if that's how you're going to feel, then it's no point of being in the trade, I think. So we'll see what happens here with Mr. Powell in about 8 minutes now. We'll have his press conference. So far that 386 is holding up decently. It's trying to hold up and bounce. So I guess we can look at the 15-minute chart. Let's take a look at the 15-minute chart. I've been using this 15-minute chart actually a lot more, and I've liked it so much more than the 5. That's been my kind of go-to. Scalping 3-minute moves. Imagine playing futures here. I mean, people are, but like playing futures off the Fed, oh my, you're going to be up huge or down huge in seconds off of that. But 386 is holding for now. That's also a decent little volume. That's actually the high, the volume point of control over the past, 4 days. So that's your spot. You start to lose that, maybe it starts to get a little bit concerning for downside if we lose this 386. Outside of that, let's take a look at FinViz and what's going on today across the markets. So it's still kind of a choppy day. It's like more stocks are up than down, but still a decent amount that are down. 52% up, 42% down today. About half and half of stocks trading above their 50 SMA versus below. So that's kind of cool that we're sitting right there at half and half. And then we got 25, 27% above the 200 moving average. Here's the heat map. Semiconductors today a lot stronger in general, so that's where that's where you're seeing strength. But outside of that, it's kind of choppiness. Nothing super. It's not like it's all green yet. Could change very, very quickly, but that's the deal for now. So 386 is holding. 386 is the spot. So the press conference for Powell comes up in, let's just see if I have it loaded up here. That was their statement. Here's the press conference. It will be in 6 minutes or so. That's when we got that. Oh yeah, check this out too. So I was looking at this, and the fear and greed index is good to kind of get a feel for it, which we could very easily, by the way, we're at the low end of greed. We could be at the high end of that fast if we get a really good rally. But got some good balance across, stuff coming off their lows. Breath is getting better. And then look at this. Put call ratio is the lowest it's been. The 5-day average is the lowest it's been since, I believe, what's this at? 8.85. We haven't had a 0.85. You got to go back to August 19th. So the put call ratio is now the lowest spot. The 5-day average is at the lowest spot it has been since August 19th, which is kind of interesting because, again, August 19th was pretty close to the top in August. The 16th was actually the top, but that's the spot. So we're getting down. So a really good reset. So if we were going to pull back and have a nice healthy pullback, this isn't a terrible spot for that, right? Or to just go to new lows too. We've seen it happen before. 386 is pre-market high. Let's take a look at that. Is that true? At least maybe that. Oh, this. You know what kind of sucks about TradingView is it doesn't give you the 4 a.m. The 4 a.m. action that we want to see. Let me go over and check out SPY on Webull. Yeah, 386 came at like 4:30, 4:40 a.m. Yeah, so that's holding that level. Pretty nice. 386. That's why I do like Webull's charts, to be honest. Sometimes I'm getting an error on YouTube. YouTube is not receiving enough video to maintain smooth streaming. I have on my end it says I got the little green arrow and the green thing going. It doesn't seem like it's wrong, but if there's a problem, let me know in the chat because I don't want that to be a problem. Would like the stream to run smooth as it generally has. We haven't had really many issues, but I don't know what it has actually been. If there has been, it's been the past couple of weeks, past couple months, where we've kind of had a little bit of stuff like that go down, which is weird because Wi-Fi wise, I haven't touched or changed anything. So I don't know. So a lot of puts this week. About to get wrecked if you're wrong. I mean, and we could get a blend of both. I mean, we can get an in between, right? There's no like why not? Why can't we get something where like, hey, you know, we kind of just chop around and, you know, maybe we go down, we go to 380 and then we go up and then we go, you know, we're in this little range for a bit. You know, it doesn't need to be like it doesn't need to be that we drop below 380 and then we go to 350 in, you know, 5 seconds. Really. Close out that yin put. Yeah, no, I am up a nice bit. Let's take a look at it on the yin. This guy it's at 10 to 20 cents. I could close it out, or I can let it expire. I mean, let's take a look at it. Yeah, it's popping up. If this dumps and we start to have a pretty nasty close, I'll probably just close it out for whatever it is. But it is up like 75%, whatever that, which is ended up being nice. It ended up being nice. Need a little bit of convincing, but I appreciate the convincing. What was it, last Friday? And it worked out. So far, SPY is trying to rally back up. Powell's about to go on. Powell's about to come on. We'll see what if he sends us higher, and we'll go from there. But I think that if we start to run, and if we start to get over this 390, right? Oh my, look out, because that could look like almost like what happened last time or last CPI. When we had a massive rally intraday, I wouldn't be surprised whether you like it or not, whether you believe it should hold or not, whether you think we need to go up or not. Doesn't matter. It could easily happen. So just be careful about the upside there if you are looking to go short or, you know, whatever you're doing. So we'll see. Check keeps flashing on and off. Yeah, I keep seeing this says. It keeps giving me an error on YouTube's end, but my streaming, I'm using OBS and it's fine. Like I have a green light, which essentially from OBS's standpoint, they're saying that it's good. Everything's good on their end. So I haven't seen an issue. We're going to get Powell in a second here. Let's see. Make sure the audio is good. I'll pull it up in a second and let me know how this goes, but I'm going to just refresh this and let's see if we got anything here. No, nothing yet. So, okay. I got copyrighted last time for that too, which is stupid. But once this comes on, I will have the audio from Powell, all that stuff. And I'll turn my mic off so it doesn't interfere and all that stupid. Because sometimes it can be like the delay and it's stupid. But 387 now, we're popping up. Can we get a high? 388 is the high. Can we break the high? Can we break the high on SPY here? Into the close? Or into Powell? Which we still got an hour and a half until close, so we still got lots of time. So we'll see what he gets. But so far, 386 zone down to like 385.50. You want that to hold if you're bullish, and if you're bearish, you don't want to see us over 390, or else we're probably going to rip face into the end of the day. So first broke a new high there, about 15 cents into here it is. All right, let's get this going. No audio yet, but I'm sure that will be coming on momentarily. Once he comes out, I'll mute myself so we can listen in. but I guess I could full screen. I could full screen. Oh, this is probably fine. We'll jump back. I could pull up the chart on the side too if I really wanted to, but we can flip back and forth a little bit. I don't think it would be the end of the world. Let me just get rid of a bunch of these links and these like stupid things I got going on here. Anything else I can delete? Probably good here. Okay. Just clear out my tabs. Before Mr. Powell comes through. There he is. Is this him? Here he is. Here he is. All right. I still don't hear any audio yet. Don't do this to us. Don't do this to us.
Good afternoon.
There he is. Let me know if the mic is too low or too high.
Strongly committed to bringing inflation. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American businesses. Restore price stability on behalf of American businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. The economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The FOMC raised our policy interest rate by 75 basis points, and we can believe that will be sufficient inflation to...
This is super laggy. Give me a second here. Let me see if I can get her. I can maybe find it on YouTube or find a better stream. This is like horrible.
Process of significantly reducing the size of our balance sheet. Restoring price stability. Process of significantly reducing the size of our balance sheet. Restoring price stability in a restrictive stance of policy for some time. We will require maintaining a restrictive stance of policy for some time. Economic development has slowed significantly. Rose.
All right, guys, this is getting really like wonky. Let's give it a second here and see if we can find a different link because that is horrible. Give me 1 sec. We'll pull up SPY and then we'll get back. So it came down a little bit off of what he's initially saying, but let's see if I can find a better link. Because I don't know why that's not working at all. That's like absolutely horrifying. Let's see if I can get a official. Maybe they got a stream on YouTube. They should have one on YouTube. Let me see if I can pull this up here. Or I can go back and try that again, but I don't know why it's taking forever.
And
I got him. Here it is.
Elevated. Job gains have been robust, with employment rising by an average of
Yahoo Finance. We'll take it.
9,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions
SPY does
will
not
depend
like
on the
that. Look at this,
totality
look
of
at this.
incoming data and their implications for
Ooh,
the outlook
got
for economic
crushed
activity and inflation.
on that.
We will continue to make our decisions
Oh, it's
by
getting
being
bad
able to
here.
communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Colby.
So SPY did not
Thank you.
like
Colby
that,
Smith,
guys.
Financial
It's down
Times.
towards lows,
On the need
not
to slow
at
the
lows
pace
yet,
of
but
rate
it's there.
increases at some point. Is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So what I want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So On the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement, because that really does become the important question we think now, is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming. And it may come as soon as the next meeting or the one after that. No decision has been made.
Oh, there it is. Spy
It
bouncing.
is likely we'll have a discussion.
Yeah, look at that. Bounce
about
off those
this
lows.
At the next meeting, a discussion.
Right back up into that 3D6.
To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember, though, that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Nick?
Nick Tamarosa, The Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high 4s, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, many different people who publish an assessment of underlying inflation.
Thank you.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilek, New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so, the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to the lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long.
So while Powell's speaking here,
There's newer literature
here's
that
SPY
says that they're short.
coming down
And, the
off
truth
of where
is
it was.
we don't have a lot of data
but
of
the
inflation
range has been
this high in
388,
what is now the modern economy. One
382,
big difference now
$6
is
range.
that,
We break
it
lows,
used to
we
be
break
that
highs.
you would raise the
Look
federal
out
funds rate,
for
financial
continuation.
conditions would react,
At least at this point in
and
the
then
meeting
that would
now,
affect
right?
economic
Because now we're
activity
getting
and
towards the
inflation.
end. We're
Now,
going to start establishing better
financial
direction.
conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy, whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up. Should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's
Whoa.
very premature, in my view, to think about or be talking about
And look at that,
pausing our
at
rate
lows
hike.
here.
We have a ways to go. Our policy, we need ongoing rate hikes to get to
Close to new lows.
to that level of sufficiently restrictive, and we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting, a new summary of economic projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
Thanks,
New
Chair Powell,
lows.
Neil Irwin,
New lows
Axios.
just hit on SPY
As you look
381.
around the economy, the clearest impact of your tightening
So
so
this
far
is the
has
move
been on
here. Let's take a
housing,
zoom
maybe
out.
Some venture-funded tech companies.
380,
It's been relatively
378
narrow in
next
terms of
levels.
the labor market, consumer demand, a lot of sectors. You don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is just very, very strong, very strong. And households, of course, have strong
Sub
balance sheets.
380
And
just
we go
hit
into
now.
this with
So we're
how-
breaking
with-
down.
with,
This does
um,
not look
a strong
ideal,
labor
right?
market and
After
excess
Powell
demand
said
in the
that
labor
it's
market,
premature
which you can
to
see
talk
through
about a
many
pause,
different
is what he
things.
came out and
also,
said. And that was the move
households
that
who
dropped us
have
to new lows.
Strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. So, sorry, was I getting to your question there? Housing, the housing part of it. Yeah, so, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that's really where a very big effect of our policies is.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just another data series. It's been unusually important in this cycle because it's been so out of line, but so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look
Now
to
it's
as a
like
50-year low.
came down to the spot.
3.5%.
Do you take calls
We're
here
getting
for a
really
balance
nothing
if you
in
want more
in
volatility? Like
labor
this is the
supply
spot.
now.
Risk
We had,
at
I think,
378.
very small increase this
Maybe.
year. which we thought we would get that back. Most analysts thought
But yeah, I
we would
wonder if
get
he's got someone in
some
his
labor
ear saying
supply
markets
coming in.
up, markets up.
You mentioned wages.
Hammer us
so
down,
I
like,
guess
you know what I
I
mean?
would characterize that as sort of a mixed picture. It's true with average hourly earnings you see, so I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. There with the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside, that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening, and maybe that's there, but it's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings. We want to see. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because, the data series is volatile. We never take any one reading. We always look at, 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, I guess as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine, and we're seeing China's having issues with the zero COVID policy and much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy, and we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
If I could just follow up on that. Thank you. The Fed has acknowledged in the past that that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have strong, in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep longer-term inflation expectations anchored, and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Hi, Chair Powell. Janelle Marte with Bloomberg. So the Fed is facing two more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of the policymakers violates or falls short of those rules, we do risk undermining that trust, and we take that very seriously. We do. So at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make who's covered has to be pre-approved. And there's a lag. It has to be pre-approved 45 days before it happens, so there's no ability to game market. So it's a really good system. It worked here. And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So, as you know, I referred the matter concerning President Bostic to the Inspector General, and once that happens, I don't discuss it with the Inspector General with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that, so that's what he's doing.
PDT on Robinhood. Let me just mute this really quick.
Earlier this year, you touted the three.
You got to switch to a cash account. You can have multiple accounts, but you switch to a cash account. There's videos on YouTube you can look up and go to a cash account. Day trade as much as you want. You can only use settled cash, but if you trade options, even if you trade stocks, it's like 2 days. Options settled next day. That is what you want to do. Webull, Robinhood, these days you can get cash accounts on both, and no worries. That's what you want to do.
So we do monitor the near-term forward spread. You're right. And that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted. And also, you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it expects cuts, or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
If I could follow up, you also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that risk assessment has changed a little bit?
Yes, that is the problem. You can't do spreads, so you'd have to have multiple brokerage accounts if you want to trade spreads. Unfortunately, on cash accounts, they don't let you do that.
To get inflation down, you'll be hearing that from me. Again, if we over tighten, and we don't want to, we want to get this exactly right. But if we over tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it, you have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates, and I don't know what we'll do when we get there. By the way, we'll have to see. There's been no decision or discussion around exactly what steps we would take at that point, but the first thing is to find your way there.
Thanks, Chris.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing. Home sales are down 25% in the past year and so forth, but none of this is really showing up in, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits.
The tools he's talking about? That's this right here.
Put a greater weight on that in order to
That's the tool.
Ascertain things like whether there's over-tightening going on, or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of it's a reweighting of tenant rents. The private measures are of course good at picking up the at the margin the new leases, and they tell you a couple things. One thing is I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did, and now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline, there's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem?
This guy.
how much that might affect your future policy to see this positive reaction?
You know, we're not targeting any one or two particular things. You know, our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher, and that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, you know, the pattern has been that one after another they go up, and you know that'll end when it ends. But there's no sense that you know that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So those I control those messages, and that's my job.
Edward Lawrence with Fox Business. Thank you, Fed Chairman. So how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
You know, in theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending. So I think those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, and you know, people are, and you know, the banks that deal with retail customers and many retailers will tell you that the consumers are still buying, and they're still, you know, they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending?
The thing about that, though, with the consumer, is that, yeah, people are spending money, but look at credit card debt. So at some point, it's a lagging thing, right? Spending money is fine, right? Whatever. But again, at some point, that's going to stop because people don't actually have the money to actually keep spending, but they have the credit cards. So I don't know about that answer. You should be able to figure out that there's a lag there.
Market in some respects, although I think overall, I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that, you know, our job is going to require some resolve and some patience over time. We're going to have to stick with this. You know, that's just we take all that as a given, but we know what our objective is, and we know what our tools can do, and that's how we think about it.
Thanks. We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window for a soft landing narrowed? Do you still think it's possible?
Has it narrowed? Yes. Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path has narrowed over the course of the last year, really. Hard to say. Hard to say. You know, again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining, translating into unemployment, or there's Okun's law. So all those things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. all I would say is that the job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think no one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by now, and it really hasn't. Although it has come down, but it's not to the extent we had hoped. At the same time, now you see services inflation, core services inflation moving up, and I just think that the inflation picture has become more and more challenging over the course of this year, without question. That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
That'll do it.
Fed Chair Jay Powell just wrapping up his news conference after the
Alrighty, let's get rid of that. And yeah, this stupid thing never worked. But so where are we here? We're down, but like, to be honest, unless we get continuation to finish off the day, it's not as bad as I thought we'd see. I thought we'd see. Oh, here it comes. Maybe it starts to come down now. I thought we'd see maybe a 2% or 2% plus type of day, green or red, right? So it's trying to hold this 380 area. That's the spot. I have I think that's going to be a really strong area of support, 380 to 378. But it's funny, the funny thing is that one guy towards the end, who was like, yeah, Powell, it seems like, markets are reacting in a positive way. And he was like fumbling over his words. First off, in a positive way. What's your take on that? It's like, first off, whoever told that guy the info is wrong because the markets were all red. So it's like, this guy has no idea what he's saying. And then Powell, you can see he kind of like, was like a little bit flustered there and was like, he reiterated like, oh, we're not going to pause. We got to be more aggressive. So it was like, these guys, like, come on with this stuff. It's like too obvious. Are they obviously blatant? And he's saying that, sitting there saying like, oh no, I'm not. My job is not to control the markets. It's to do restore price stability, yada yada yada. But you could tell he wanted to reiterate that we're pause is not coming anytime soon. We're not there yet. Whatever. Guess 2% too. Yeah, I would think so. But here it comes. If we start dropping below here, probably see more red. But we'll see if it tries to catch here. We came down to lows on the day just under 379. We're sitting just under 380. See if that catches as support. If not going to look good. We still got about 40 minutes to go until the end of the day, though. So still got some time. It's all predetermined. No, I'm not surprised, but it's funny how he came on and said that. Meanwhile, it's like, first off, I'm pretty sure he came on and said that like markets are reacting in a positive way to this, and I'm pretty sure SPY was here. First off, if SPY was in here, we're down from yesterday. Number one, QQQ would be down much more. I mean, he didn't even have whatever. You know what I mean? Question was already there. He already was going to ask a question either way, most likely. So, but it's just funny. I think people, hopefully people can start to see through some of this stuff too, As much as Powell sat there and said he doesn't control the markets, he, to some degree, kind of crapped himself and was like, oh, shoot, we're not actually doing what I thought we were going to do, and let me just try to, walk it back. Whatever. Meanwhile, he, I was joking before, but does he have someone in his ear saying, we're up, take us down, I don't know. Wouldn't be surprised. I didn't see anything in his ear, but 355 dump. It's been a while. We'll see if we get that. I mean, if we break this low right here, if we break 378, man, we could see some aggressive selling into the close. It's possible. But yeah, so outside that, everything is still down. Put call ratios back over $1. back over, not a buck, over one. DXY rallied right back up. So DXY initially was down and now it's right back up here. So that doesn't bode well for the markets at all, my guess. We'll see if we get flush to new lows here. We're sitting on support, so see if we get a flush to new lows. Might play. Let's see what I can look at for some SPY contracts. Let's see. If we look around the room or look around here, SPY about to hit new lows. What are some, these 380 puts, my goodness, went nuts. What is this, like 375s are pretty cheap. Yeah, you can look at those. 375s maybe. $2. Play that for fun. I kind of like that. We're hitting new lows here as a speculative push down to a flush to the end of the day. Although 378 is the area that does need to hold, that does need to break, like, for that to happen. Although DXY is ripping up, I do like that for a possible play. I like it. What is this? 235 area. We'll see if we can get in and play for a little bit. New low is coming in now. Couldn't take the stress. Yeah. No, I get that. I mean, I had like essentially nothing going in, had like a tiny, contract that I played and that's it. This one I'll play it pretty small, but essentially the speculation is that we're breaking new lows here. DXY, the dollar is ripping face. This is not good. And we're probably going to sell off into the close. Doesn't matter if the market liked it or not. It's just that momentum is taking us in. So we'll see if we start getting back up over 380, we'll cut it off and that's it. But it's decently out the money, so we'll see. But ideally, if you want to hold an overnight put or if you want to do any of that crap, you need to see under 378. That's the spot in my mind. You want to see underneath, under 378, and we're probably headed down, down decently further. So 375. I mean, we could probably get there. That was the after hours back on. Was that Amazon Apple earnings day? People kind of panicked back then. Maybe we see more than that, but we'll see. This looks like if we break that 378, this line right here, which also if I zoom out, what is that level for? That was the highs, the prior highs back in early October as well. It's about a month ago. We start breaking that. Yeah, we probably come down a couple bucks, probably come down a couple bucks. So old job lit off 20%. I'm not surprised. I mean, you're seeing that stuff, and the whole comment on the consumer, I thought was absolute BS, right? As some of you guys were talking about too. Look at credit card debt; it's freaking like skyrocketing. I mean, people are gonna keep spending because it's not like this has happened so fast on a macro scale. If you think about it, right? We went from things being insanely easy and good and all that stuff. Money was just getting printed and given to you, to now the complete opposite of that, in like a very, very short period of time from a macro perspective. But this is generally speaking, should take longer, right? You would think, but because of what we had and the leverage and how things are working, right? We got the complete flip side. So people are still stuck in their ways of spend, and the credit card debt is going to catch up with you at some point. But right now, for the next couple of months, couple quarters, like it's not going to be like, you're not going to notice much of a difference. Eventually, though, you're going to go, oh shit, I'm maxing out my credit cards. I can't spend any more money. I physically can't. And so now all of a sudden these businesses, and you look at the consumer at that point and go, oh yeah, maybe it's not so good anymore. And that's going to happen, and that's going to come down like a rock fast. But again, how bad, how fast, we don't know. I mean, we could speculate, but like Powell says too, I mean, to some degree, it's unknown. We don't know how bad and how fast and this and that. So it looks like we're on our way potentially for a down 2% day. We're going for it here a little bit. Markets gave up. Yeah, it seems like that's the spot right here. We're kind of teetering on the edge, and looks like we probably going to give it up. And by the way, DXY, look at this, DXY. 112 test coming. Now, of course, this is a quick reaction. We can get some spikes and whatever. We want to see how this plays out the rest of the week, but that's not a good look. The 10 years also pushing up to, highs of the day right there. The VIX, believe it or not, the VIX is down. I think my VIX is delayed here, but I'm pretty sure it's still down. Jeez, the VIX is down. I guess after the meeting, there's volatility that comes out, but that's pretty weird. But yeah, here goes SPY. It's attempting that 378 whole dollar area. It's right on it. And, I wouldn't be surprised if it goes. So I got that little tiny put, but that's it. That's all I'm going to play into the close. And then we'll see what happens. It's really going to be, it looks like, things can change. It looks like my guess, we're probably going to see downside into CPI next week. The more downside into CPI, the better the CPI reaction probably ends up being, whether it's good or bad, because you can probably sell off a good bit into that. But that's the deal. Appreciate it, Marcel. VIX is red. Yeah, that's interesting. It really is. But, I think we've seen this happen a lot, and the VIX has been kind of weird this year because what happens, we've seen these big events, CPIs, Fed meetings, and then on the backside, last CPI, the VIX didn't spike. We were waiting for the VIX to spike up. Last CPI, let's go back to the CPI. It was back in here, right? The 12th, 13th. And we're like, well, the VIX is sitting up here. It's ready to go. It could easily spike and we can be at, a 40 plus VIX. It didn't happen. It just straight up did not happen. And, it's funny how that reaction's been. So these contracts are not really moving, to be honest, that fast, although they are out the money. If we get into the money, oh my, they're going to juice. But what do we got? We got these 235s essentially playing a breakdown below support. Yeah, it's not something I tend to play, which is why we only played one contract just for fun, because I didn't really have any interest in trying to guess. But we're breaking support now, and we're getting a move. I honestly, maybe I hold it overnight for all I know, if I'm willing to take the risk, But yeah, that's the chart. And the chart's telling me to be short here, or you don't want to be long, generally speaking. So the chart says. So let's see. 5-minute chart, new lows on SPY. Yeah, it's accelerating now. Now we're down about almost 2%, so we're accelerating. And we'll see. 375 is kind of a psychological spot. 374, there should be maybe some reaction there. That's where we kind of held back last week. Also came down to 373 Monday the 24th. So maybe those are some spots to keep in mind for some possible bounce zones. But yeah. Yep. Hopefully, if you guys had an opportunity this week or something like that, to sell covered calls the past couple recently, if you did, you're looking pretty good. I did. They're all going to expire worthless. Let me check back in on that yin play here. Let me just double check and see it's up. Let's jump back to this. It's taking a second. Yeah, I might just take this off, just in case we unravel. Let me just get rid of this thing because I can get out of here for like 15 cents. It's a win. It's a nice win, right? See if I can get out for 15 cents right now and someone will buy me. Maybe not. If I up that to like 16. You got to go 20. I'll go 20 cents. I'll just get out of it just to get out. That's up, $80. Oh, still not going to fill. I'll see if it fills before the end of the day. If not, maybe I'll get out at 25. But oh yeah, these look at SPY. Oh my. These contracts from 235, and I literally bought low of the day, and they're up pretty juicy already. My goodness. It's unraveling pretty fast. Yeah. Let me just see if I can dump these guys. 25, sure. 25 I'll take just to get out of this and to lock in a nice little gain. All right, I'm out of that. The put that we sold last Friday, that's done. So essentially the only position that I have is this, and it is a SPY put for Friday expiration, not today expiration, Friday expiration 375 puts, which we are essentially coming into like right now. We might even hit that level before we even close. So that is where we're at. Yep. The biggest question is the VIX then, right? Because like that doesn't make any sense. Now you would think the VIX starts to come back and bounce a little bit here, I would think, but that doesn't seem like it is. So I don't know. But that's where my question is. If we take a look at outside of this, what do we have any other? Oh yeah, tomorrow we got some jobless numbers coming out. Jobless claims tomorrow. Continuing claims, initial claims. So we'll see what the hell that looks like tomorrow. ISM services index. So yeah, jobless claims will be kind of interesting to see what happens tomorrow on that. Payrolls, unemployment rate on Friday, labor force participation on Friday as well. that's the next, I guess, big economic data to keep in mind or to be ready for, to be prepared for going forward. But down 2.4, now we're down 2% on SPY. Qs are down 2.75. Let's see. IWM is down 3%. So the weakness there. Look at these charts though, man. They're crazy looking charts. This is why it's like, even on days like this, if you like technicals, it doesn't matter. You know what I mean? It doesn't matter. I think the biggest thing is key levels of like I had in mind, right? That 380, 378, 380, and then the 390, Did we have a bias? Like, yeah, I'm sure everyone has a bias. I think it's going to go up or down. They want it to go up. They want it to go down because they got puts, calls. But I did just try to keep the bias away. I had no positions outside of that one put that I sold on Friday, which was already up. So that was the only position I had, and was essentially looking to wait for a break of either direction towards the end of this situation anyway, because mid Powell speech, we've seen the volatility screw you multiple times. And so far we got the same thing we've kind of seen, right? We had initial reaction up, and then I didn't do it, but if you happen to grab just lottery puts, you could have grabbed 375s, 380 puts up here. They would have been They would have been very cheap at the time. They would have been like, $1 or $2, not even, right? Depending upon which one you bought. Versus, and then you're going to stop out over 390, like a lot of people probably would. You did very, very well. if you did. Now you had to kind of essentially gamble early because there's no guarantees that we're going to get the same reaction we've been getting. And that's what at some point we're probably going to get, a day. And I was thinking even just for a minute there, but while Powell was speaking at the end, that maybe, because we kind of had this big move up, we came down, then we bounced, and we're back up in here. I was like, imagine we close flat. We close like right around this 382, but obviously that has not happened. We are dumping off the face of the earth here into the close. 30 minutes to go into the close. We're coming down to this 376 areas now, where we're sitting on the daily chart for SPY. Let's take a look. We're losing a pretty crucial spot right now. If we get under 375, under 374, there's not much volume till like 37 or 367. So to be honest, like this is going to be the spot. If we get under this, like if we close under 375 today, which is very possible, I wouldn't be surprised if we see sub 370 before Friday. We could even have a gap down. So getting hammered down right now. But I wouldn't get too, I wouldn't get, for those who are looking to be long, right? I wouldn't be too, this is, again, it's not the end of the world, number one. And number two, a lot could change in the blink of an eye. You got a good CPI, you get two good CPIs in a row, and we're off to the races, ripping off, bear market rally or whatever you want to call it, we're going to get. QQQ broke all supports, 261. Yeah, let's see. Yeah, this is a key. Oh, yeah. I mean, this 267 area is key on the Qs, which we've had this zone charted out for a while. That's going to go. Yeah, you're coming down. 260, probably going to be the next spot on Qs. So I think the chart actually looks cleaner for downside on the Qs, and they've been weaker. So if you were going to play something, that's not the bad idea to play that. IWM has been stronger, although weaker today. So it's finally giving it back. TLT, let's look at the 10-year. So the 10-year 4.1, we'll see if that holds. DXY coming up to 112 right now. You don't really want to see this thing getting much above 112. That would not be ideal for the markets, for Bitcoin, for speculative assets, for just in general. But we'll see what it wants to do. If it wants to go for it here. Yeah. So that's what we were talking about. We were joking too, right? As Powell mentioned, right? If we like the risk of not doing enough, right, is that inflation becomes entrenched, and that's actually going to be worse, later on down the road. The risk of doing too much, and he said, well, we have the tools to handle that and to take care of that, right? What are the tools? QE, printer, right? So essentially, from our perspective, right? Like if you're trading, if you're an investor, right, you are going to probably have to go through like the ups and massive swings. But from a trading perspective, if they over tighten, like you kind of almost want that, right? Think about it. You almost kind of want that. If they over tighten, then what happens? Then, okay, we got some crazy volatility on the way down. Guess what? Once the printers come back on, we saw what happened. We just do it again. Rinse and repeat. Small caps, craziness again. I don't know. Money printer comes back on. Guess what? Eventually, at some point, it turns off. You play the backside, and you get these big ups and downs. And that's just, from a trading perspective, you kind of like that, because when things get quiet, it's going to be boring. And at some point, we're going to go back to being boring at some point. But I'm sure that we'll all look back and say, yeah, back in those days when SPY would, move $20 in a day, we're going to be looking back at like, yeah, those were the days. And now SPY moves, $3. Right hook from Tyson on SPY. Gosh. Yeah. Yep. I hear you here. Put calls up over. Yeah, look at that spike on the put call ratio. My goodness. Off of that Powell pump dump. Powell pump and dump. Because that's kind of what it was. It was initially pumped and then dumped. I wonder, I guess maybe not. I don't know how much of a reaction we would have had, but I do wonder if that guy at the end didn't say the markets were reacting in a positive manner to your comments. And by the way, the markets were down when he said that, so they were not reacting in a positive way. Unless maybe the Dow was flat, I don't even know. I wonder if he didn't say that, if Powell didn't have to reiterate the pause, no, we're not pausing anytime soon statement or whatever. I wonder what we'd be at right now. If we would have flushed these lows, or if we maybe would have held up and kind of finished flat, because there was a period of time briefly. I mean, this is where we were. We're kind of on this like attempt to come back as when he said that, which we were still red on the day, but we were coming back off the lows a little bit. So that's where we were. So it's funny. Very funny. So we're trying to, we got a couple little bottoms here, trying to hold support on this 376 for now on SPY. Let me make sure I put a stop loss on this so I don't lose like an idiot. Let me just put a stop on that just at like this. Probably I'll go to like 247 just to like make sure it's a win. A small win at that, but I just don't want to lose. So that's the deal. Probably could get stopped out and then it could dump. Whatever. We'll see. But now we got what looks like, my guess, obviously that could change overnight and we can gap up tomorrow and everything could change. Breaking down below this 378, my guess is that we've got some downside to go. And then I think a good potential spot would maybe be, down around this 367, 368 area if we were to bounce around here. Or maybe, again, actually, we're thinking about it, CPI is the catalyst. So CPI is going to be next week. So ideally, you come down into here, and then CPI will obviously be the next leg of either we bounce or we dump. So that's going to be probably the progression of where we go from here. It got stopped out just like that, so we are bouncing back. Whatever. We could play it. We could add back in, technically, if we do like it, but not really interested. 40% in the covered calls are resold. All mine are going to expire worthless, it looks like, at this point. So we'll just, it's funny how I got stopped out. Now it's back. Jeez. That's a quick move, man. That's a quick move. But if this comes back to like 230s, maybe it's worth a shot. But I'm not going to let that become a red play, because it's not worth it. Not worth it. Especially in this choppiness. I didn't touch the small account today either. We can pull up the Weeble. So we did the reset every week at the 8,000 number. I have no positions. You can see on the left-hand side, there's no positions. We're at, so far on the week, it's up 373. So roughly speaking, I guess what is this? Realized gains of 350-ish, 360. It's not bad. Slowly getting working back into it. Let's see what's the small count up to. The small count's up to 405. Yeah, the small count's doing well. We had another $30 day today. It was earlier this morning when I played it, but so no positions across each. So I've been feeling a lot better by being cleaned out. And then other accounts are just like longer term positions that I'm holding. But I've been feeling way better just doing that. And I don't care, $100 a day, $50 here, $200 there. It all adds up, and it's easier when you don't have a bias. I've been finding. FXRM out, brother. Thanks for doing this. Appreciate you guys for tuning on in. Hit the thumbs up button on the way out if you guys are going to dip. But we'll hang out for another 20 more minutes to see where we close up. If we stay under this 378, I would say puts are going to be your friend for the next couple of days, unless, we snap it back up overnight. But I don't really know if I care to be here, be hold overnighting and worry about the futures, because there could be news that come out anytime. So that's the deal. But yeah, and if we get this, which I've been pretty good about the small count is, I think, is at the highest it's ever been. So if I've been feeling dialed in, whether I realize it or not, the past couple of days, past like week and a half, 2 weeks, just in general. And when does it stem from anything specific? The only thing I can think of is that I stopped. I now been going cash every night, which I hadn't done. So yeah. Weekly profit target? Not really. No, I don't have I don't want to kind of, not that it's restricting. I don't want to get myself thinking that, I got to do this, I got to do that. All I've been doing really is just working on the process of everything and figuring out what I've been liking. And I've been getting a good feel as to what I like. Back tests, flags, pretty much that's it. So breakout. Okay. Come back test it on the 5-minute, 15-minute chart, 1 hour chart, big picture breakout. Okay. Back test. So what's an example of a situation like that we'd like to see? Well, I would like to see, which we've kind of maybe got a little bit here, is this 378. If we were to bounce up a little bit on SPY here into the close, tag this 378, or even even this 380 on a bigger time frame, right? If you zoom out to like the 15-minute chart, something like that, back test an area and then look to play the continuation move to the downside. You can play it on different time frames, but I generally like the 5-minute or more, and nothing shorter than the 5-minute. That's just a rule that I'll play off of. And then flags. So, directional moves, big move down, big move up, bull flag, bear flag develops, play that. That's what I've been liking the best. And so just making sure that I can get a good feel for that. The size will come over time. I haven't really, to be honest, I was someone who just swing trade like in the past. Now I don't, we haven't had the market to do it again. And obviously, you get burnt to a crisp in the meantime, but you live and learn. So I've been liking the day trade side of things, but generally speaking, it's easy to overdo it. And I've been finding that the cleaner the approach, the less positions, the less I'm worrying about, the more I'm just concentrated on what am I seeing? Is there anything that's even worthwhile? The more that I do that, the better the results have been. And, the size will come with time. Who cares? I don't really care. I'm taking a few contracts at a time on the options. Can turn that up to 5, 10 eventually, as I get more comfortable and I've dialed into this is exactly what I know works, and just slowly scale it up. But that's it. So the weekly profit target in terms of that, no, but every week the new rule is any amount over 8K comes out. So Friday afternoon, whatever the account's at 38373. So as of now, it's Wednesday. We actually had 3 green days, but on average, we're averaging a little over 100 a day so far, I guess. It's pretty good for, a side thing essentially to do, from what it's been. I never really pulled from, but yeah, we'll take out 300, maybe 500 at this pace. If we come up to 3,500, 8,500 by the end of the week, we'll see. Reset next week and do it all over again. Next week, I'm not going to be around though for the second half of the week. So only be around Monday or Tuesday. And then I'm off to PA. Penn State and Eagles games. That's where it'll be to finish off next week. This is, to be honest, you want to talk about like a potential flag, you're kind of getting one right now on SPY here. So you kind of have a backtesting flag almost, which is, I would have liked it a little bit higher up, in a perfect world. But like something like this, I would like for, to see downside. And the stop loss is pretty straightforward too on these, because once you establish, the top of your flag, or you have a support or resistance, you just stop out over it. We get over this 378, I'm out. If I was going to take it. That's it. Sold TQs, 18 puts for 98 cents. Sold Mara. Maybe not a bad idea to do that too. Maybe not a bad idea. We were looking at this XBI earlier, the biotechs, and we were saying, hey, if we get above 84, we're looking juicy, right? We got there on the initial Powell, but then we dumped. So that 84 breakout will come again at some point, maybe later this week. Maybe I probably would wait till after CPI, but that's the plan on that. $4.99 from the Society. Appreciate it, man. What's the clean approach? Forex background. I'm learning option spreads. Clean approach. When I say clean, I just want to be just mentally to be as clear as possible when I say that. But what I mean is really essentially coming in no positions. Like when you have the biggest thing, at least in the stock market space, and everyone has this same thing, because you have most people come in, they generally understand long-term investing, right? And then you get in from long-term investing to swing trading. And then you go from swing trading to day trading, right? That's kind of like the progression over time. Or if you don't swing anymore, you kind of go to day trade, the day trade side, generally speaking. I have found that they're drastically different. And the thought process and the thought process and the mindset needs to be different in each of those areas. And so what I've tried to do a better job of is completely separate the long-term stuff that will take me approximately 5 to 10 minutes a week to manage or deal with. And what I do is just sell covered calls on green days. That's essentially it. So there's like minimal managing or even thinking about that. That's one thing. Then the account. All my job is essentially now, that's the way I'm thinking, is to look at the net P&L at the end of the week. The job is to have that go up, right? That's all that matters. Doesn't matter about trying to be right, guessing that this is where we're going to go next, saying that I think Powell's going to sink us or he's going to launch us. Doesn't matter. Like that doesn't matter what he does. When you have that approach, you come in clean. Now you can let the charts tell you what the heck's going to happen, or let the charts speak to you a lot better. So, right now we're under this level. This would tell me that we're going to probably go down, right? Under this level until we break back above it. I would want to be short for here. But that's the thing. When you have, whether you realize it or not, it's subconscious. You're going to bed saying, oh, I got those SPY calls for, January. And even though January is so far out, like you let the big picture trade work, you have that big picture trade in the back of your head while you're now looking at today. And what happens today has nothing to do really with what happens in 6 weeks, 6 months. So that's the thing. Looks like we're going to get that potential end of the day sell-off here. Looks like let's maybe take a small scalp into the close here. See if I can find something that looks decent. Small account's up $30 today, so I wouldn't want to risk that. I would probably play a contract that's around that level, 30 cents or so. SPY or Qs, probably play that, and that's really the deal. For Friday, wouldn't want to play something else. Yeah, let's do 365s. They're for 40 cents, but we'll take it. 365s for 40 cents on the small account. And we're going to sell before the close. Either we're going to break back up or this level here, or this flag is going to break to the downside. This is another one of those bear flags. It's not as nice in terms of a 15-minute chart, bigger picture chart, but it's really based off of this afternoon's price action. And here you go. You move down, flagging, and you're looking for a flush here to new lows. If we get it, take the profits and move on. It's simple as that. Trying to go to new lows, 376. Here it comes. Day trading is subjective. Yeah, it could be. It depends. For me, it's like this depends upon spreads, right? If you're playing spreads, it's different. It could be different than. For me, I sell covered calls, right, on longer term holdings that I'm not intending to sell, right? So it essentially pays me a dividend, hedges my downside a little bit, nothing crazy, and that's what I do there. But outside of that, for the most part, I don't do too much spreads. It's mostly just I pick a directional play. So right now it would be puts, right? If you're playing this bear flag, the directional bet is puts. I'm playing puts for a flush to ideally like 375, maybe even more, and that's it. To the right or it's wrong, and you move on to the next one. But yeah, you don't necessarily. I sold a put, in this account last week, sold a put for what was it, $1. Essentially, if it expires worth it's $100. Cool, right? But for a swing trade, I'll look to be very, very small size, so that it's not going to be something that I have to think or worry about at night, essentially, or worry about when I can't control my entry or exit. Like if you're in an option play, you can't, as much as you what do you think you have control, you do to your stops, but you can't control the CPI that comes out an hour before open. You can't control the job data that comes out an hour before open. You can't control what happens overnight overseas. These are things you can't control. And so it's something that the biggest reason why you'll hold that stuff and why you'll kind of almost guess and gamble is because of FOMO. That's the biggest thing. Whether you realize it or not, it stems from FOMO. That's what I've seen. And what I mean by that is just FOMO, that fear of missing out, that like I need to be in this because if I miss the upside move, I miss the gap up or the gap down, I'm going to be so pissed. Who cares? There's going to be another setup tomorrow. You know what I mean? So that's it. See if this bear flag pans out last 10 minutes. It looks like it's, yeah, here it is. I'm looking for 375. Let's see if we get a 370. Those puts are up already $10. My goodness. I'm all out of water. I just got ice now at this point. Cut spending to an absolute minimum. I feel you there too. I mean, stuff here is super freaking expensive still. Moving apartments out of downtown. I think that rent is like going to be pretty much the same. They upped our rent here if we were to renew it, like a decent amount, like $150 a month, which is like kind of dumb, but like I think percentage wise, it wasn't as bad as the prior up that they had from 2020 to 2021. That was a big increase. It's like they increased like 25%, which is freaking wild. But that's what happened. That's what happened here, at least downtown Austin, man. I mean, that's where everyone's been just flooding to. At least they had. I think now it's not as bad. It's kind of calming down a bit. But we're moving to get essentially a place that's almost double the size for the same price, if not, well, technically, like it's the same price we're paying now, roughly. But it will be lower than if we renewed this place. So cutting a little bit to some degree, I guess, if you think about it that way. Not going to keep up with inflation, I guess. But yeah, I mean, it's going to be an interesting next couple of months, to say the least. Liquidation sale at my house. Crack a brew. Appreciate it. I mean, hopefully, yeah, from Cali. Awesome. I need to get out there at some point. That's one of those things that like I've been saying recently that I need to do more of, is I need to just say like, screw it, I'm going to book a trip and do it and go, you know, to wherever I want to go. I don't think I've been to California, honestly, in my adult years. Maybe when I was a young kid, but I don't remember that stuff. Ramen. To be honest, I was back in my college days. I was never a ramen guy. I was a Kodiak cakes. If you guys know Kodiak cakes, like the protein pancakes, that's what I was all about. I would pound those, just mix it with water, you know, have my parents sometimes send it in. Like, hey, if you're going to send me anything, just send me pancakes. They go to Costco, buy them in bulk, and they just send them to me. And that's what I would eat all the time. All the time. But yeah, here's this is the other Webull account. I played the small account on this play. I don't know, sometimes I just go back and forth. It's kind of fun. Hey, we're at 420. Look at that. 420, baby. Here's the, where are these? This guy. Here are the puts that we played on the breakdown of that bear flag. So they're at 57. They're up pretty nice. These are just taking today's profits and taking I don't want to say a shot, but taking a setup from later in the day and with today's profits. So we got pretty much the target that I'm looking for here. I'm getting greedy for another couple cents. A sub 375 is what I'm looking for. Psychological level whole number. Let's see if I can put the sell on like these, like I think like 60-cent sell would probably be pretty good. Let's see if I can get it. That's 60. That it might not if it bounces a little bit here though. But we'll see if I get that 60 before the close. I'll sell it before the close no matter what. I mean, you could technically hold this. This contract doesn't expire, or you can trade it for 15 minutes after the close because it's SPY. If it was an individual stock, no, but it's SPY, so I can hold this one into the close a little bit. And you could even, in theory, just realistically, go into the close today and say, I'm going to grab a spec put for tomorrow, you know, buy a Friday expiration put, SPY puts. If you think we're going to go down and gap down, you know, you could do that too. In the after hours. You have 15 minutes to do it. Costco hot dogs. Didn't I see in the interview? He was like, they asked him about inflation and he's like, I will not, under any circumstance, raise the price of the hot dog. Like, that's just never happening. Raise the price of their stuff. Yeah. In Costco, but not the hot dog. Not the hot dog. 5 cents away from getting taken out on this. 375 is a pretty much hit. It hit 375.03. FSR report after hours. Yeah, I don't know. I in a perfect world, the market would be a little bit on better footing here, ideally. for something like that to feel good about it. That's the concern, is that the market's just getting rocked. So it's going to be, if we didn't have a down 2.5% day across SPY, NASDAQ, or Qs are down 3+%, IWM 3, Dow was only down 1.5%. Not terrible. It could be worse. If it wasn't down this bad, I would feel a little bit better about it, but there's that 375. I'm just going to go take this off. Let's just go take this here. 53. Oh, come on. Now she's going to bounce on us. Leave it at 53 and see if we get filled before the close. Well, of course she's going to bounce. Costco food is fire. Yeah, it used to be where, well, because my family growing up, I mean, I had triplet siblings, so my mom was always at Costco. So we'd always, whenever we go shopping, it would be the worst experience ever because I hated that. I hated going shopping with my mom at Costco because it would take forever. But you always get rewarded with, like, pizza or whatever. Something good. If I just held. The thing is, though, like, you could say, you'll find yourself saying that a lot, but you got to pick your spots at some point. You got to pick your spots because you could say that, and then that's just part of that's just reinforcing the FOMO mindset. And, it's fine, but it's probably not going to be good in the long run. You're probably going to get burnt more than you want. I've been through a ton of shit. Even this past year has been an absolute shit show. But you learn a lot. If you're still alive, you learn a crap ton. You learn a crap ton from it, and now you've got all that experience for next time. But again, like we were just saying before, like we were, a few minutes ago, if this repeats and the Fed over tightens and has to do the QE printer, blah, 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 right, again, because they over tightened, what are we getting? We're getting the same exact cycle just playing out again, right? Next couple of years, guess what? 2024 might be the QE year and might be the time to buy everything, and everything just goes up and all-time high. Who knows? And then 2025 is the same thing we got this year, like just differing degrees. I'm sure there's always going to be differences there, but if that's what happens, it's just going to be these general cycles of these similar situations will keep playing out over time, but you'll have the experience from being through it. And we don't have experience, an inflationary cycle like this really to play off of anytime recently. And nothing recent. There's nothing recent that, you can kind of go back and say, oh yeah, just like, 04. Like, yeah, but you had downside in 08. You had downside in 2000, 2001, 2002, I think, was that extension of that bear market. I mean, it was never, the reasoning and all that stuff is not necessarily the same every time. So it's always fun, I guess, to play off of what we got going on now and to learn from this experience and everything. So get out while yeah. Yes. Yeah. I would say it's in this situation, like, for example, like, yeah, you could have said, oh yeah, if I just held, like, yeah, I technically had that put that we play on the breakdown here, which I don't like playing breakdowns, which is why I put the stop loss on it. And I got stopped out on this wick. If I had just not gotten stopped out and didn't put a trailing stop loss on it, technically, yeah, I still made money with a stop loss. Technically, I'd be up a lot more right now. But, was it worth risking that going back and not having a stop loss? And dare we say, if we got back up into here, I'd be down substantially. What's the point? So pick your spots at the end of the day. This position is up, 10 cents already, so roughly. So we'll see if we get into the close. And we'll cut it off, but essentially playing with house money and small count type of day where it's like you have a $30 day on the small count, which is like, 8-10%. Again, it's not sustainable on a larger account over the long term, but playing the small one, when you get a day like that, you can play with house money on something that you like. This example, right? Playing this bear flag here into the close that's really it. So market's about to close in about a minute or so. And then once it closes up, you got about 15 minutes. If you wanted to trade, you have 15 minutes to trade options. I guess you have the after hours to play any stocks or whatever, but if you want to play options, you got 15 minutes to ice. And we can look at some stuff and just see like what might make sense. And maybe we play something on the bigger account to play with a little bit of today's profits as a potential overnight. Like those are the types of swings. When you have profits, like that's the type of stuff that I'm fine with. And you have good profits from the day. There we go. That was a $13 So on that position, by the way, too, like I'm not playing with size, but that was from 40 within, you guys just saw it. It was 20, not even. It was like 5 minutes, 10 minutes. From 40 cents, we grabbed those puts on that bear flag to now hit 55. I got taken out at 53. So, okay. 53, that's a 30% profit. And those are Fridays. They're not even today expiration. Those are Fridays. So, I mean, it doesn't matter. The size will come with time. You just got to work the process and get good at and figure out what you're good at. I've been loving the flags. And we earlier this week and last week, it was bull flags. It was upside. So you had big moves up, consolidate flag, move up. I mean, that's beautiful. It was beautiful stuff. Now it's just bear flags. It's the exact opposite. Some people have problems looking at the charts from this perspective and saying, I can't, when we're going down, it's so much more difficult for me to see the same patterns. I don't really have a problem with that, but you can also inverse your charts. Sometimes people like playing inverse charts. By the way, that would have hit 60 cents. I had a sell there originally. It would have hit 60 cents. Whatever on those puts. But we finished the day on the small count, 418, not 420. Sorry, we got close. Maybe tomorrow. But we're up this week's another good week so far on the small account. So I can't complain. The past month has been good. It's almost 100% ups and down. Really on this chart was choppy until the 25th. Something changed then, and what it was I just stopped holding anything overnight. That's what changed. That was literally it. When I look back at it, that's it. So if that doesn't tell me something, then I don't know. Let's see. So if you're looking for something juicy, let's just see what we can find. Maybe there's something worthwhile in the after hours to snag as a potential little post-Halloween treat. Let's see. So that does not look good on SPY. I think SPY puts, honestly, would be the play. I think 370, 367 would be my target by the end of the week. I think we can easily get there tomorrow, for all I know. So SPY puts to that level. The momentum is just so nasty. And there was a good amount of chatter of buy the dip chatter. You had a good reset on the put call ratio. Popped back up a little bit today, but that was a good reset going into this. Maybe that's the move. But the thing is, if you're bullish, or if you're just long in general, right, long-term portfolios, it's not a bad, if you came down to here and bounced, I mean, so what, right? That's a healthy pullback. It's not the end of the world. There was a lot of struggle to go to new lows here. And you could just tell this market wanted to go up back down here, sub 360. We get a decent pullback, and now maybe she holds, right? Maybe she ends up holding up and builds a higher low. Big picture, right? After CPI and stuff. But from now to CPI, you kind of might have a little bit of a runway. So this 365 put is interesting. What do we have here? This is the back to the other account. Today's P&L 117. I would be willing to take that. So I might take one of these overnight, just one, see if I can get filled on this. This is back on the other account as the only swing, just because we closed pretty bad. And so my thought here is that we're probably going to come down. Ideally, in a perfect world, this happens tomorrow. You kind of get down to 370 tomorrow. And then those puts would be, I would sell them before Friday. I wouldn't want to hold them again, ideally. So we'll see. Hate money only when I'm losing it. Money may come and go, and that's another thing too. I don't even know. This might not even get filled here. No, I'm on the bid. Yeah, there it is. I'll hold that one position overnight. That's it. Essentially risking half of today's profits, which could be made back tomorrow anyway. No problem with that. So that's what we'll play. 365 put for Friday at 62 cents is what I got in at, and that is the deal. So we'll see what happens on that guy. Back to the charts. Let's look at the Qs. I guess you can look at QQQ and say puts there would be better, maybe. I just like the SPY volume, but Qs I would say maybe 260 puts. Let's see what the QQQ puts would look like. What are those going for? 260. I'm guessing they're going to be more expensive than these SPYs, so let's just see. Option chain for Friday. Qs 260 puts. Yep, they're gonna. No, look at that. That's actually pretty crazy. They didn't. It didn't load. They're 1/3. They're 140. So they're like double the price, a little more than double the price of the ones I just got. I wouldn't play those, but I think that's where you're probably gonna head. So if you're looking for a target area, it's probably 260 for a possible bounce, and then if you break 260, you're coming to probably test or come down to those lows and get somewhere in between there. But 260. would be the spot. That also lines up, that level also lines up, if you zoom out on QQQ, lines up with, what is that? That was the pullback from the fall of 2020, September 2020 pullback on the Qs. So that's going to be a solid spot, potentially to hold up. So we'll see. On the bright side, Leap's getting cheap. I still, to be honest with you, Roku and Robin, oh yeah, we can check on those too. Just missed negative 5 figures today and realized, but don't let it bother me. Realize had a good day. That's when it comes down to that. When you just look at the realized gains, it's all that matters. At the end of the day, that's what matters, right? 2024 Leaps, guarantee those will work. To be honest, I still think this melt up thesis is the whole idea of like this. I think it's very possible still, as crazy as it sounds. I think it's and it could easily. We saw like the market when we start to rip, it starts to get pretty aggressive to the upside. We start feeling pretty strong. It just might happen, later than maybe some were expecting. But we start seeing CPI 2-3 months from now like get consistently lower, and the Fed goes, oh shit, on a flip of a switch, Powell can go from, seriously, we've seen it. We've seen it happen before. Well, I guess the whole inflation is transitory to where we are now. Took its time, but but the market will take that in reality, right? 3 to 6 months, you can get the biggest rally that we've seen or the most aggressive rally we've seen in a while. So I don't think that it's necessarily like, oh my God, it's the end of the world. Like this is never going to come back. No, we're not even at lows. We still got a ways to go to even get lows. And I think that realistically, if maybe this time we end up holding on, we just have a big picture inverse head and shoulders maybe to play out. If we hold on to the lows of June, what do we have? And maybe something like this. I don't know. An inverse head and shoulders is possible for all I know. I'm not going to try to I'm not going to try to jump the gun and say, oh, it's over. We can easily have a big rally, and at some point, I would anticipate that this downtrend will break, and we'll have a big rally off of the back. Do we go to all-time highs? I don't know. Don't really care, but the potential is there, and especially with how many people are bearish. When that narrative turns, is the key. How much downside is between here and when that turns? That's the biggest question. And you ask most people, they're probably going to say a lot, but I don't know. When that narrative turns and Powell goes from this aggressive tightening, talk to the other side of wave maybe tightened too much and we got to start pausing and maybe they start thinking about the pause. When that talk happens, there's so much cash on the sidelines. People are massively in bearish positions. When we get the flip of that, whenever it is, there will be a big move. And you don't want to be fighting that move. It's just that who knows when. It could be next year. Could be in 2024. Could be in 6 weeks. Could be in 2 months. I don't know. So trying to guess the exact timing is the biggest problem. And when you're right, you can do so well. But when you're wrong, you can be wrong and you can lose a lot of money and it can be a very slow bleed, which, I'm sure we've all been there and done that at some point. So that's my take on it. That is my take. If we dump off even harder, no, yeah, that's the other thing too. Look for relative strength, right? So on this pullback, if we finish off the next 2 days of red, on this pullback, look for where we see relative strength. What's holding up better, right? Is IWM or Qs or is biotechs or small caps or risk on plays? What's holding up best? Whatever's holding up best is where you want to have your eyes on so that when we do have those upside days or weeks or when that switch turns, just look around. Like I was looking at some of these names, like one of my favorite for risk on is Affirm, right? Now, let's see what Affirm's looking like. Affirm got rocked today, but maybe it's not holding up as well. But if Affirm doesn't go down and make new lows on this next pull after earnings here, we'll see what happens on earnings and, go from there because that could change things a lot. But maybe even Shopify is another example, right? Shopify has been relatively strong as of late, right? So when this tide turns, these names are still, when you zoom the charts out, they're down humongous. So when the tide turns, these are the ones that could do 50, 60, 100% off of where they are. Then that's the shares. The options for swings could do even more, right? Depending upon how you want to play it. So that's where you want to keep your eyes because when the tide turns, there's a lot of money made in a very short period of time, or it could be longer, but you can make a lot very, very fast. And same thing with small caps, right? When the time comes, here's my list of small caps up here. When the time comes and we start potentially playing some of these, I mean, my goodness, could we see 100%, 200%, 300% runners across the board? Could be the case. It just might not be right now. But when the time comes, these things are bottomed out. These charts are exactly what you want to see. Look at the grill. This grill chart is beautiful. Beautiful. I mean, this is a beautiful setup. If all of a sudden grill blows through and starts falling off and goes down sub 30 cents, different story. But if this chart holds, oh my goodness. And there's so many charts that look like this. So that's the take. XBI leap, again, even XBI, despite today's kind of destruction, right? Just to the degree this afternoon. Let me find XBI. XBI finishes the day down like 2%. Fine. Let me get rid of some of these levels so you can see it a little bit better. It's on indicators. It's sitting on indicators right now. We got, let's zoom in a little bit better. You broke the downtrend. If this holds around $80, it could even come to 79. It could even come down to this trend line for all I care. 78. If this area holds on XBI, what do you see when you zoom this chart out? I mean, this is awesome. This is awesome relative strength. If this area holds as a high or low, it would be beautiful relative strength on XBI. So this is where you want to look. And when the tide turns, guys, you saw what happened on XBI. Look at these moves. XBI goes from 62 cents on June. What is this? June 16th. August 5th, it's at $95. I mean, less than 2 months. It made some massive moves. So, and that's all it takes is a slight turn from risk off to risk on, a bear market rally. Boom, game over. You can do very well. So, let's see. And then, again, that's the other thing too. Oh yeah, I've got to pull up Roku. I'm sorry, I'm missing this stuff. But when you look at this too, like, yeah, Roku rocked, popped up to 61. Now it's down to 44. My goodness. But the same thing is that this will just, again, when we have this environment too, which is kind of good. When you have events to send us down, what are you doing? You're just feeding the bears. You're feeding the short bias people who, at the end of the day, right, are going to get over aggressive at some point, and they're going to get blown up at some point, right? So the same thing applies, and we've seen it happen before, right? Just like as we saw the last CPI, we go down to new lows, blown out on the short side. People get a little over aggressive. I mean, what we can look at, and we have to take a objective look. Look at the put call ratios. They were up here, right? Back in September, October, they were up over 1. That's a lot of puts being bought, relatively speaking, because most likely, not most likely, most of the time, we have got a bullish bias, investor base here. Markets are bullish bias, generally speaking. People are buying leaps. People are buying calls more than puts, right? There are people who just trade long. They don't, on red days, they don't even trade. So people just generally buy puts more than calls. And this got aggressive in terms of puts. On average, we had, 1.1 puts being bought for every call, which is a lot relative to the 0.7 that we see on average. So this number gets up there. Now it came back down. Did it go down to where it was back in August? No, not all the way, but it has given us a nice reset. It's back to 0.87 yesterday. Okay, I could see, a little bit of a reset here, and now the markets could come back for a pull. Do we have to go to new lows? No. But now if this number gets back over 1 to finish off the week going into CPI, the more the sell-off you get before CPI, the lesser the effect of a bad CPI is going to be, which you can get the exact same thing that we had last CPI. So be ready for that. If the CPI comes in even, in line or a little bit worse than expected, and we gap down off that or we sell off hard into that day of CPI, we could rip, because that's what we saw last time. And that could be the market looking ahead to the next CPI, which will now be lapping over an already huge increase from the year prior. So those CPIs into next year, I would say I would be very excited about seeing that inflation roll over in a substantial fashion. That's what I'm thinking. So we shall see. We shall see. By the way, those those puts I got are already down $10. Got them at 62. They're going for 55, 54 right now. I guess market popped a little bit, but whatever. We'll hold those into tomorrow, and that's it. Small play. If it goes to $1, great. Take them off. Hood. Let's see. So Roku got crushed, but maybe it comes back a bit. Hood. Yeah, it's kind of flat. It popped up a little bit. It's up 4% in the after hours, but it's not back up to the highs here. It had $12 is going to be your spot. Sold calls near 12. If that area hold, that's going to be kind of a resistance spot. That was your resistance spot this afternoon too. So, yeah. Think about it. If you're winning on selling covered calls and someone else is losing, keep selling, not buying. Yeah. I think that when it comes down to options, you realize that you quickly can go from being the loser more often than not to the winner by just go from a buyer to a seller. And it's not as flashy and whatever, right? But still, gains are gains, right? At the end of the day. So let's see. I'm being very curious to see what happens overnight. My guess is pretty nasty day. Let's go back to see a day like this, right? We haven't had a day like that in a while. What we've gotten off of days like this is more downside, generally speaking. We've had some days where we've bounced pretty hard off of that. Last Fed meeting, I believe, was the 21st of September. If I'm not mistaken, we finished the day at 377, which is kind of funny because we finished close to that area today. Next day, we finish at 374. So well, not that much downside. The next day after that, finished at 368. So downside kind of progressed from there. But my thought is that we probably got a nice little pretty clean move down to like upper 360s. And then at 368, I mean, I'm not going to have why buy it? No bias there. That's a potential bounce zone. So who knows? But that's the look there. So the game is wild. Cannot do it alone. I really hope that's what this stuff can provide, right? From terms of this channel, the streams, all that stuff, and that's what it's all about at the end of the day. That's why we do it. Let's see, Costco. I'm seeing Costco report earnings. Live streams were one of them. Now that we do them, like I feel like I can never go back. Also, I think YouTube made it a lot cleaner. I just realized I was looking on YouTube yesterday, and they have some pretty big updates. Like they made everything look differently. It's like everything looks completely different. But when you go onto someone's channel, now you have like all the tabs. It's like homepage, videos, which will only be videos. In the past, when you click on videos, it would show videos, shorts, live streams. It was like all this crap. I was like, oh, this is kind of just too much. Now it's like only videos, and there's a shorts panel, and there's a live stream panel. So it's got and there's like a playlist panel. There's like a lot. They cleaned it up a lot. So they made it a little better from a cleaner point of view. And I think that, to be honest, Google and just in general, YouTube, I think is a beast in terms of this space. I mean, I don't know how the shorts, and I'm not sure if they're going to be able to compete with TikTok and how that plays out over the long term, but if they can do a better job of kind of like making each of their segments kind of separate, this is probably going to be the platform to be, like, I would imagine, my guess. 'Cause I hate having to think about like, oh, well, I always have people in the past like, oh, if you're going to stream, Twitch. It's like, I just never got into it. I don't want to learn another platform. Is that me being, lazy? I don't know. But like, why am I going to, jump ship? And not that I would jump ship, but it's like, I don't know. It seems pretty good. The update looks pretty good to me. I'm pretty happy with it. Can't complain. So we'll keep running it here. No complaints. If you guys haven't yet, we've got a Discord below. Free. It's free. Keep the conversation going at night, whatever. All that stuff. And I try to be as active as possible in there. But that's the plan. So hope you guys got something out of the streams. Like always, hit the thumbs up button on the way out. And then what we're going to do is tomorrow. What's tomorrow? Tomorrow's Thursday. We'll stream again on Friday. That's the plan. Maybe we do every day at some point. But potentially have some schedule changes in the future. So we'll have to see what happens. I think Tuesday and Thursday may just need to be days that we cannot stream in general. But Monday, Wednesday, Friday, with my current situation and schedule, that's what we can do. So for Power Hour is usually the time. So with that said, thanks so much for watching, guys. I will see you tomorrow, and we'll see what happens here. It should be a wild next couple of days. So peace out. Enjoy the rest of your evening, guys. See ya.